I'm a co-founder at Checker. We built global liquidity network for stablecoins. So we make it really easy for financial institutions, fintechs to build global stablecoin applications.
What do you see as being that unlock for TVL?
I think tokenized government debt is probably the first asset to be issued and get adoption.
Speaking of pipes and building, right? We some of the audience that we have are builders or people who are looking to back builders. All right, everybody, welcome to another episode of Frontera, where we analyze and discuss crypto in frontier markets. So Jack, super happy to have you here. We have Jack here from Checker Finance. How are you doing, Jack?
I'm good, man. Thanks for having me.
Awesome. So super happy. So Jack, for those of you that may not be familiar with yourself and your work, give us the really quick rundown on who you are and what you're up to and what Checker is.
Yeah, so I'm a co-founder at Checker. We built global liquidity network for stablecoins. So we make it really easy for financial institutions, fintechs to build global stablecoin applications because we give them a single access point to liquidity. So on and off ramps globally, especially in emerging markets.
Nice. So tell me more about the kind of how did you end up at this thesis for the need for this global unified liquidity layer for stablecoins?
Yeah, so my co-founders and myself collectively, we used to run trading, treasury, engineering across traditional financial institutions, so Wall Street hedge funds, but also large crypto institutions from wallets to publicly listed company to HFT. And we ran 24/7 financial service firm basically, right? And we had to build the plumbing. We had to build internal plumbing for how money gets moved across time zone, across borders, across different assets, different settlement timing, different settlement rails. And to be honest with you, it was pretty broken. It was pretty complicated. We have lots of bank accounts, lots of different types of assets, have to move things around to service our clients, from remittance firms to Bitcoin miners to crypto hedge funds. And our thesis is a lot more financial institutions are going to face the same pain point, right? Especially as they start to juggle between the fiat currency setup they have, and then they start to use stablecoins on the back end because they want to offer it as a product to the customers, or they want to, use it internally for efficiency purposes. So this need to solve the complexity is basically why we're building the company. As I'm sure your audience know, right, one of the biggest bottleneck to stablecoin adoption is first mile and last mile liquidity. So it's been a journey.
Nice. Okay, so you end up having this really practical pain point in your life as all of you are trading across these different desks and financial markets, right? And then you say, cool, like we definitely see the need for this really simplified aggregation layer. So walk the audience through, what does the solution look like today, and what is Checker, for a financial institution, let's say, what does the landscape look like for them prior to Checker, and then once Checker is live, and how do these two worlds differ, and what does that unlock for the market?
Yeah, so imagine if you're running a neobank or a remittance app or a merchant-facing cross-border payments company, and you would like to use stablecoins to get faster, cheaper, more reliable settlement rails. And it depends on the country that you're going to first launch. You have to first find and design the right flow of funds. So you need to think about, okay, I have some fiat currencies. How am I going to convert that between stablecoins and my local fiat currencies? Who am I going to go to? And what time of the day can I do that conversion? What is the cost? What is the regulatory compliance? What is the counterparty risk? And the market is very different. If you're trying to convert LATAM currencies to stablecoins versus if you're in Africa and you have stablecoins and you're trying to convert to local African currencies. So it's a pretty clumsy process, super fragmented market. And with Checker, we help our financial institutions customers go to market super fast because we give them a single access point, and now they can plug into the Checker network, which is a global network of liquidity partners from licensed payment service providers to specialized FX brokers, OTC desks. And we also built tools, we also built technology, so APIs, and also different types of products that help our customers really easily transact and interact with the broader network. So those are mostly focusing on the treasury workflow, trading workflows, and we usually serve the COOs, the head of trading, head of treasury, of our customers' organizations.
Nice. How's it going so far? Like, what reception have you had from the market? What are people been really excited about, and where, what does that sort of indicate about the wider trend of stablecoins in the space?
Yeah, man. So it's been hell of a journey. So we're growing super fast. We've had the past 2 to 3 months, month over month, 3x processing volume growth. I think this month we're going to be at least 2x. We're active in Latin America and Africa. For the audience who are interested, feel free to check us out on the website. We made an announcement 2-3 weeks ago with some of our customers and partners, and so we're super excited that we're the enabling infrastructure for leading remittance apps, fintechs that serve as the digital economy, processing payments for creators, for advertisers, we're now in the AI labeling space as well, and obviously the classic bread and butter import export in the emerging market, where you see lots of adoption, especially from some of the guests that have come on to this show as well that you've chatted with. So it's been a great growth sort of journey and path for us.
3x month over month growth, sustained over a long period of time is it's hockey stick chart right there. So congrats on that. Cool. So let's talk more about kind of the wider stablecoin landscape. You're in touch with, as you mentioned, a lot of the people that we have on this podcast that are very prominently building at the forefront of stablecoins. Let's talk about some of the macro trends. I think the institutional angle is also really interesting. Like you're hands deep with all these different people, really understanding like their specific pain points. So give us that primer on stablecoins from your vantage point, and where's the market heading? What more infrastructure do we need in order for stablecoins to truly reach? One of our theses is essentially that all of the world's money will come on chain, right? And so how do, and particularly through stablecoins, I think that'll be just a massive catalyst for that growth and development. So give us a sense for how do we get from today to this world where every single sort of financial transaction happens on chain?
Yeah, that's a great question. I think a lot about. It's interesting you asked this because my first company in crypto was in the RWA space. So I wrote a primer into real world assets together with a couple very good friend of mine, and it was fortunate 2-3 years ago, before the word RWA was popular, we made it popular, and it became the sort of and we shared a lot of the observations about the industry, and predictions about where things will go. A lot of that views we have, I think, still apply within the stablecoin world. After all, stablecoin is tokenized cash. Tokenized dollars is a form of RWA, and so I can definitely drop the link to that tweet in the show notes afterwards. So look, I think there is a lot of I think there is a push and pull pressure for stablecoins. I think the push pressure to adopt stablecoins comes from the US in particular. Genius Act was passed last week. The US financial institutions, financial services industry is very much incentivized to push this forward. I'm a little bit hesitant about the adoption in emerging market and the reaction from the local governments. I think dollarization is not as popular as CT would think. Lots of folks in the BRICS country, for example, particularly on the central bankers and regulators, are very concerned about the US dollar hegemony. So are they going to adopt their own parallel financial system? Are they going to use a Chinese yuan stablecoin? Are they going to use gold? Are they going to use Bitcoin? That is an open question. But judging from the past year or so, we're already seeing some central banks are getting quite hostile on crypto or on stablecoin regulation because they see it as a way of money leakage from the local economy, right? Think about continents like Africa, Latin America, where in general there's a dollar outflow, and the local economies they don't want investments to leave the countries. They want to trap that investments. So how does that play out? I think that's a very interesting political question. I don't really have an answer, but that's a really deep rabbit hole that would determine like whether stablecoin gets from whatever 1.8 trillion in outstanding to 2 to 3 trillion, for example.
That it's funny you mentioned the point around the geopolitics of stablecoins, and it's something that we've discussed a lot about. So, for example, Korea recently, the president of Korea made some statements around wanting to restrict people having Korean won stablecoins on chain, right? Because on their eyes, what that then means, it's much easier for you to essentially offload your Korean won into US dollars. My thought is actually that the reason people will want to offload into dollars is because and particularly I think like DeFi 0 to 1 innovation and the improvement that it brings to capital markets, I think is incredibly important in the sense that it now gives people access to, let's say you want to take out like a loan and you want to do it in, let's say, the Korean won, right? If you're able to do that on chain, you perhaps are much more likely to actually hold your Korean won, right? Instead of having to offload it, because DeFi is the superior infrastructure. So there's this like link between local stablecoins and DeFi. And DeFi, much of DeFi these days is denominated in dollars. There's some European stablecoin markets, for example, on Aave. But my question is, what is the bridge between DeFi and local stablecoins? And I do feel there's some sort of infrastructure that's missing there. I know Aerodrome, for example, permissionless market, you can supply liquidity for BRZ, the Brazilian Real, and USDC, and it's actually yielding like pretty high rates, right? So how have you, or what conversations have you seen sort of emerging here at this intersection of DeFi and local stablecoins, and what that might mean for regulation, particularly in emerging markets?
Yeah, so I think there's a couple moving pieces in your question. We're definitely very keen to work with non-USD issuers and the infrastructure that enables that. That's one of the segments that we're discussing with partners very, very closely. It seems to me, I think the biggest obstacle is actually not the sort of DeFi, AMM, borrow lending protocol. I think all the DeFi core primitives are fairly built out. It seems to me the issue is the bottleneck to adoption is actually TVL. So there's not enough applications, front ends that accept deposits and drive TVL of those non-USD stablecoins. I think one key product differentiation we need to figure out is, let's take Brazilian Real stablecoin, for example, is to figure out who are the users of that. So if you're a neobank and you already work with a local sponsor bank in Brazil, what difference does it make? What benefits do you have if you work with a BRL stablecoins? I think there's something interesting regarding local yield bearing stablecoins, especially in emerging market where the yield is generally very high. But I think we need to think deeper about what kind of unique applications it unlocks when it's on chain, potentially borrowing lending. But then, most borrow lending in DeFi is over collateralized, and most actual users in emerging markets, they don't want over collateralized. They want actual consumer credit, which is not possible yet in DeFi. So I think the moment we solve TVL, the moment we get demand, everything else will come.
What do you see as being that unlock for TVL, right? Because I think a lot of people are trying to say, like, push the local stablecoin narrative, saying, oh, local stablecoins are going to be how people end up doing like payments at their mom and pop shop down the corner, right? That may be true, but it's like I do oftentimes wonder about like that. What is that 10x improvement from cash, for example, or even PIX, right? Like how do we build a 10x better system than PIX? And I haven't seen a compelling answer yet on the retail front, but I'd be curious to hear more about like mass inflows of liquidity and TVL into local stablecoins and what will ultimately drive that.
Yeah, I think that's a really good question. I think it's going to be things that local payments rails cannot do compared to a non-USD stablecoin. So I think DeFi potentially is one of them. I think there's some intersection with tokenized RWA, for example. If there's BRL stablecoin and you can use that BRL stablecoin to buy tokenized stocks from Kraken, from Revolut, from Robinhood, that is potentially interesting because now you have this distribution channel, and the investors in Brazil now has an easier way to subscribe to these new offerings. But apart from that, I think that is what builders and founders have to probably differentiate pretty hard. I think especially in certain emerging markets where the local fiat system is good enough. Exactly like you said, local stablecoins needs to be 10x better. I don't think we're there yet.
I fully agree with you on that. I do think the other angle that it might be really interesting and like a big driver is essentially maybe you've seen Etherfuse, for example. Yep. I'm pretty sure they're part of the Checker network, right? But I think that's a really strong catalyst for the adoption of these local stablecoins, essentially on-chain emerging market yields, right? Whereas, right now in DeFi markets on, say, Aave or Compound, they're yielding like low single-digit percentage points. Whereas if you look at, I don't know, the Mexican bonds, the CETES, for example, or the Argentine bonds that are in the double digits, for example, that I think could create a really compelling narrative for people to get on chain, because it's a trend that and it's something that we always discuss on this podcast as well. Is we actually don't think that the answer is not that it's very reductionist to say, oh, local stablecoins imply that we'll see a massive outflow of that local currency into dollars, but rather it's just a geopolitical question, right? It's just a matter of like, how is the peso doing writ large, and then how does that, right? So right now people actually don't really want to escape the peso because it's doing kind of okay, right? And actually the central bank of Argentina is paying fairly high interest rates on the peso, so people are actually trying to safeguard their assets in pesos. So what have you seen, especially given sort of the background with RWAs, right, and being one of the first thought leaders there? What have you seen at this emerging market yields and how that will overlap to the adoption of these stablecoins?
I think tokenized government debt is probably the first asset to be issued and get adoption. I think that will be the backing of non-USD stablecoins, and then that will drive perhaps some DeFi interest to do collateralization, speculation. I think it remains to be seen how much the CT audience likes these types of assets and tokens. Look, there's a classic dilemma in crypto land, right? Is you got to build for the degens in order to get adoption, or you build something super boring, which is full on just stablecoins. Non-USD stablecoin, non-USD assets, kind of in between. So it might take some time.
Yeah, no, I agree. I think it's also getting people, how do we migrate liquidity from, there's also the FX risk, right? If you're holding like BRZ, for example, the Brazilian real, you might be exposed to Trump, launching some sort of tariff against the Brazilian government, for example, and the BRZ depreciates 5% in a day, right? And so there go all the yields that you've generated over the course of the last few months. So I think that's the other piece that we also need to just like start shifting. And I love this idea, like we need to get out of the CT sort of bubble as well. And I think that's probably how we end up enabling this sort of TVL escape velocity. How about cross-border payments? Let's talk about that. Let's talk about like what you're seeing there. Like what are some of the clients and institutions that you're dealing with? So, I, for example, have colleagues all over Latin America, and the best way for me to send them money is through stablecoins. We do this, as a company. We receive money in stablecoins. So everything that, all of our business, and I'm sure all of yours as well, sort of happens on stablecoins. What are we seeing sort of the larger financial institutions comment when they start thinking about adopting these stablecoins, knowing that it's, an order of magnitude better offering than traditional incumbent systems?
Yeah, so we're very fortunate to work with some of Latin America's largest financial institutions, both traditional and digital native and fintech, where we become enabling infrastructure for them to, start managing stablecoin liquidity. And look, from our seat, I think there's a couple archetypes. depending on the verticals and use cases and client type. I think there's the dollar savings use case, which is more like the neobanks and the digital saving wallets. Those are fairly straightforward, where they maintain deposits in USD, USDC, USDT, and different forms of stablecoins. And as the consumers need to on and off ramp, these neobanks can plug into us and can get very effective and very deep liquidity. That's one archetype. The other archetype we see is payment service providers who serve import exporters, corporates who need to repatriate funds. And usually those archetypes, these PSPs, maintain different pools of liquidity across the countries that they're active in. And they have needs to rebalance that liquidity and maintain a neutral book, for example, because payments companies are not FX trading houses. They don't want to take a position. So they need to source liquidity from the market. And that's where the check-in network can come in. And then I think lastly, there's the internal USD treasury use case that we see. So especially for banks or larger brokers and aggregators who traditionally they have exposure to USD via traditional banks. So they trade with Standard Chartered, or they trade with certain regional banks, but they don't get paid the USD until 4 p.m. when the market closes, or tomorrow even, or T+1. But they discovered that they can actually buy and sell stablecoins intraday, and they can lock in their exposure, and they can have the physical stablecoin with them on chain in the wallet that they can move around. And this means that for the same amount of equity capital they have on the balance sheet, they can recycle that much faster, because now they can trade in and out, they can market make in the markets that they're active in. So I think there's like three types of archetypes, right? So just to repeat, there's neobanks, consumer-facing neobanks, there's the merchant-facing PSPs, and then there's the larger scale, traditional financial institutions, from banks to brokers to aggregators. The motivation might be different, but from our point of view, we have devised these archetypes based on the internal plumbing, and we're plumbers. We build the pipes, and that's why this gets me excited, because the more complex the pools of liquidity and the treasury setup becomes, the more interesting it is to start thinking about how can stablecoins, how can these pipes accelerate the fluids, right? The liquidity flowing through. I like to say liquidity always flows through the path of least resistance. And I think stablecoin is the path of least resistance. But in order for water to flow through from one place to another place, you still need the pipes. And so, we're lucky to build the pipes.
Nice. I love that. And I fully agree, right? And it's precisely the reason why I think stablecoins will win, because they are fundamentally sort of that path of least resistance. And so speaking of pipes and building, right? We some of the audience that we have are builders or people who are looking to back builders. So as you think about sort of the infinite number of problem sets that exist in sort of the payments, stablecoins, infrastructure landscape today, if you were to have a very early sort of idea stage startup, what are some of a couple of verticals that you'd be looking to tackle as an early builder right now?
I'm curious to hear our audience view about this. I think compliance is still a very much unresolved issue, especially in crypto and stablecoins. I think cross-border payments compliance are pretty complicated. Depending on the types of payments, so from individual remittances to payroll to import-export. And by compliance, I mean the classic, there's obviously the AML risk compliance. But I think also as taxation becomes complicated, a lot of countries in the world are starting to tax stablecoins or tax crypto. And they also have some form of FX tax. Figuring out how to compliantly, what is the tax obligation, what is a tax compliant way to structure the most efficient transaction, I think those are the bread and butter for finance, right? Any types of finance ultimately is about those things. But then there is a gap right now for the stablecoin world to start solving and thinking about these problems.
Totally agree. I mean, I think that's really exciting. It's like not even brand new technology, but at least it's now certainly in the zeitgeist. And people are just like massively racing to sort of address these problems. I think particularly in emerging markets, this is why we're so excited about this like content that we're putting out and some of the research kind of conversations that we're having, because this is where this stuff really matters. And this is where, if you're in the US, I could Venmo you. If you're in New York, like boom, here you go, Jack, right? And like no worries. But if I'm in Asia or Latin America or Africa, we don't have that infrastructure. So like that leapfrog is just going to be really, really prevalent, right? What do you like in the conversations? Because given you work with a lot of emerging market providers and players, like how are investors and sort of global institutions, how do they usually think about emerging markets? And what are the things that oftentimes people get wrong with regards to the adoption of stablecoins, particularly in emerging markets?
Yeah, so I think here's my hot take. I think founders and investors who like sipping coffee in Soho in New York or doing hiking in San Francisco, they probably won't get the best view of adoption in emerging market and stablecoins. I think 80% of the value of stablecoin trend is going to be created by emerging market, because that's where the TVL is, that's where the MAUs are, that's where the transactions fees are. And I actually spent some time in both Latin America and Africa, on the ground, going to markets, spending time with my customers, hanging out with the team, and it's definitely given me a lot of hopefully unique insights. And I think one of the most misunderstood aspect of emerging market fintech and stablecoin adoption is that it's going to stop at the story of stablecoin as dollar savings. I actually think a lot of the end consumers and companies and merchants are getting very smart and very sophisticated. They're thinking about FX arbitrage. They're thinking about comparing rates across different providers. They're thinking about, if once I have stablecoin balances, how can I spend this using a debit card or credit card? How can I pay my vendors? And so I think there's a story of, there's going to be more the Brexes of Latin America, but powered by stablecoins, the Mercury for Africa, powered by stablecoins. And then I also think, just one last quick point is, I think people generally underestimate how fast growing and how big the emerging market adoption of stablecoin is, particularly for use cases that the US or European audience might not resonate. For example, China is the world's largest exporters of consumer goods, and the trade corridor between Latin America, Africa to China is massive. And the shipping infrastructure, the e-commerce infrastructure is mostly there. It's easy for people to go to Alibaba, go on JD.com to buy consumer goods from China in bulk. But if you live in Nigeria, if you live in Brazil, if you live in Mexico, Colombia, it gets tricky if you're trying to send money to China. And so, personally and as a company, we're super excited to work and power a lot of our customers to start unlocking use cases between emerging markets, trade corridors, sending money, and to tap into these like macro trends. And you don't really hear the story, I think, from the American or European audience and the sort of media, right? Because I think most English speaking world doesn't know. Like in Mexico, one of the largest fintech is Didi, which is a Chinese version of Uber, right? They do a lot of consumer credit. And then similarly, Meituan, which is a food delivery app in China, has dedicated $1 billion to expand in Brazil, which they're also going to do consumer credit in Brazil. And so the extent of which Asian emerging market technology, large conglomerates are expanding overseas, and how does that intersect with this stablecoin adoption? This is super fascinating, but very much uncovered.
This is a really, really interesting point, but I think we're going to start wrapping things up now. But I do feel that geopolitically, there's also some really important implications, and Asian technology is essentially looking, as you said, right, Didi being one of the key players in the tech space in Latin America, whilst also the U.S. trying to figure out geopolitically how does it position itself, right, and the tensions rising and shifting between the East and the West, right? We're seeing it in a number of different sort of sectors right now, and I do feel that like the frontier of this battleground will actually happen in technology, right? It's these soft wars that we're seeing that are gonna, as you said, is it will we run on the Chinese yuan? Will BRICS run on its own digital currency? Brexit already is quite advanced, for example, in Brazil. And I think that ultimately, like that access to data, that access to liquidity will be where we see kind of these soft wars playing out ultimately. And I think this is why it's like critically important that stablecoins essentially unlock energy in form of money to be able to move freely. And the question is like, where's that energy being routed ultimately? Nice, Jack. Well, listen, any sort of parting words of wisdom? I think one thing that you mentioned and why we do this podcast is because we believe that the MAUs and the liquidity and the transactions are all in emerging markets. So, perhaps like what can the audience do to get closer to these users? What should they be studying? What practical sort of insights can you give people as they think about engaging with these emerging markets to get a really deep sense for what the needs are in these specific markets?
The best way to do it is fly there and switch your Spotify, Instagram location to that country, that city, learn what the young people, what the local people are, what kind of music they're listening to, what kind of Instagram ads you're seeing, right? That's usually a very good glimpse into the type of goods and the type of trend and consumer trends that local people like. And then talk to the folks, right? There's a lot of remote contractors in emerging markets who work for the West, and they get paid in stablecoins. That is, I think, a really good entry point to learn more about stablecoin adoption. And there's a bunch of conferences as well. Those are obviously a good start. But I quite like traveling, and I love learning new culture, eating new food, meeting new people, and I love intersecting my work with this aspect of my personal hobby. So yeah, it's Instagram, Spotify, YouTube. Look at who are the famous YouTubers in those countries, and just be absorbed in that local culture.
Nice, really getting in the weeds. Awesome, Jack. Well, listen, where can people find you? Find the work that Checker is doing.
Yeah, so on Twitter we're Checkercore, so Checker and then CORP. Similarly on LinkedIn, our website is checker.finance. Feel free to check us out.
Awesome, Jack. Really appreciate you having on, man. Take care.
Amazing. Thank you.